Opendoor Technologies has exploded higher today in one of the strongest single-day moves we've seen from the stock in months. As of around 3:30 in the afternoon market time on Monday, the share price is hovering near $7.90, up roughly 20% on the day. For a company that spent the last week battling post-earnings volatility, sentiment swings, and questions about its long-term trajectory, this kind of rally is not just impressive, it's revealing. It tells us the market is starting to reprice something about Opendoor's future. And the real question now is why? What exactly changed today? What forces came together to produce such a strong surge? And does this move have legs as we head toward market close and the rest of the week? There are two clear catalysts driving the action. The first is the shift in macro sentiment following the latest US jobs data. The numbers came in cooler than expected, which is exactly what the Federal Reserve has been waiting for. Weakening labor data typically signals that inflationary pressures are easing, and when inflation eases, the probability of interest rate cuts increases. For most stocks, a potential rate cut is good news. But for Opendoor, it's more than that, it's oxygen. It's fuel. It's the kind of environment in which its entire business model becomes easier, more efficient, and more profitable. When mortgage rates fall, housing affordability improves. Buyers move. Sellers move. Housing turnover increases. And Opendoor, which relies on transaction volume as the core driver of its revenue, suddenly finds itself in a more favorable market cycle. Today's jobs data ignited exactly that narrative. The second catalyst is analyst sentiment. While the details differ depending on the source, the idea is the same. A major institution has increased its confidence in Opendoor's future. Whether it was a bump from $7 to $8, or a reaffirmed overweight rating, or simply a positive note reiterating the shift happening inside the company, the market heard something it hasn't heard in a while: optimism. For a stock like Opendoor, which has had a difficult year battling macro downward pressure, soft earnings, and narrative challenges, an analyst upgrade carries outsized weight. It doesn't just encourage existing holders. It invites new buyers. It validates the turnaround narrative. And it tells institutions that the risk-reward profile might finally be shifting back in their favor. But beyond these two catalysts, there's something deeper unfolding that the market is responding to, even if it isn't fully conscious of it yet. And that something is the increasingly clear pivot happening under CEO Kaz Nejatian. Over the past few days, we've seen Kaz speak publicly about housing policy, specifically about the idea of a 50-year mortgage. When asked about Donald Trump's proposal, Kaz didn't hedge, he didn't dodge, and he didn't offer a generic corporate answer. He said the proposal would be one of the most pro-owner government policies in decades. That one comment might seem small, but it signals a major shift in how Opendoor is positioning itself. Kaz isn't just running a company that buys and sells homes. He's aligning Opendoor with the long-term structural reforms that could reshape the entire real estate landscape. A 50-year mortgage doesn't just adjust monthly payments, it fundamentally changes who can afford to buy a home, how often people move, and how liquidity flows through the housing system. If such a policy took hold, or if any similar long-duration affordability initiatives take root, Opendoor stands to benefit enormously. And the market is beginning to realize that. Meanwhile, investor sentiment around Opendoor is being amplified by the unusually persistent voice of activist investor Eric Jackson. Jackson has become an almost symbolic figure in Opendoor's narrative. His Street Corner campaign recently passed its 82nd day, a reference to the $82 price target he originally placed on the company. And while that number is aspirational and long-dated, the consistency of his message signals something important: belief. Not blind belief, but belief in the long-term transformation happening inside Opendoor. He's repeatedly said the media has missed the entire point of the company, calling out the oversimplified portrayal of Opendoor as a struggling iBuyer rather than a tech-first housing platform undergoing reinvention. Whether you agree with Jackson's style, his sentiment is resonating with a growing segment of the retail community. And retail enthusiasm, when paired with macro tailwinds and analyst validation, can produce exactly the kind of explosive move we're seeing today. Another factor worth noting is short interest behavior. When a stock jumps 20% in a single session, it's rarely purely organic buying. Often, what you're seeing is a combination of long buying and short covering. Opendoor has historically had elevated short interest, and today's sudden spike likely triggered stop losses and forced short sellers to buy back shares to cover positions. This kind of reflexive action can add fuel to the rally, accelerating the climb once the initial catalysts have set it in motion. If short interest remains high, we could see continued explosive moves, especially if tomorrow's market opens with follow-through buying. Of course, it's important to ask a more grounded question: is this move justified? Fundamentally, does today's rally change anything about Opendoor's earnings, its margins, or its immediate operating environment? On its own, the answer is no. The company still faces headwinds. The housing market is still cooling. Margin pressures are still real. But what today does change is expectation. And in the stock market, expectation can be as powerful as results. Investors are starting to price in not just current performance, but potential future conditions: lower interest rates, increased housing liquidity, and improved transaction efficiency under Kaz's more disciplined leadership. Today's rally is a vote that the worst may be behind the company. It's not a guarantee of future success, but it's a meaningful shift in sentiment. As we head toward market close, the key question becomes: what's the right narrative to frame this moment? The story isn't just Opendoor is up 20%. The real story is that Opendoor is at the intersection of three powerful forces: macro relief, renewed institutional confidence, and a leadership strategy pivot that the market is only beginning to understand. A great video angle for today would frame the movement as a breakout moment driven by macro momentum but underpinned by a bigger structural story. Something like, Opendoor rockets 20%. Is this the start of the rate cut rally? The video can explore whether this move signals the beginning of a sustained trend or whether it's simply a reaction to today's news. A strong angle is to present the move as the market getting a first glimpse of what Opendoor looks like in a lower rate environment, a preview of what might come if mortgage rates fall meaningfully. Another angle is to highlight the contrast between sentiment last week and sentiment today. Just days ago, Opendoor was battling fear, uncertainty, and post-earnings pessimism. Now, it's one of the best-performing stocks in the market. That kind of shift doesn't happen unless the underlying narrative has changed. Investors want a story to believe in. Today's rally is their way of saying, this might be the beginning of one. You can also tie the move to the broader housing cycle. Historically, housing stocks lead turns in macroeconomic conditions. If today's jobs data is hinting at a softer labor market and potential rate cuts, Opendoor becomes an early beneficiary. That sets the stage for a rally that isn't merely technical, but cyclical. And finally, you can touch on institutional recalibration. Analyst upgrades are often the first sign that Wall Street sees value where the market has been too pessimistic. If institutions begin revisiting their models and projecting stronger revenue and margin potential in a lower rate future, this rally could be the start of a major repricing. So as we head into market close, the story of the day is this: Opendoor didn't just rise on a single catalyst. It rose because multiple forces that have been building quietly beneath the surface all converged at once: macro relief, analyst confidence, retail conviction, leadership clarity, and short interest dynamics. Today's rally is a reminder that markets can turn quickly, that narratives can shift suddenly, and that companies positioned at the intersection of policy, technology, and macro cycles can experience explosive moves when conditions align. Whether this becomes a sustained breakout depends on what happens next, how the company executes, how the housing market evolves, and how much conviction investors bring into tomorrow's session. But one thing is clear: Opendoor is not being ignored anymore. And today, the market gave it a spotlight it hasn't seen in months.